MVW had a relatively good month in February. It outperformed the ASX 200 by a bit over 1.4%. It now outperforms the ASX 200 over all time periods up to 3 years, as well as since inception. By and large, MVW does well when a lot of the large cap Australian companies underperform. So during the month of February, BHP fell about 8%. The Commonwealth Bank fell over 6%. Now, the Commonwealth Bank, as well as a lot of the other banks, they fell really on the back of some expectations of future earnings. It's expected that the net interest margins are probably going to be squeezed. And the net interest margin is essentially the difference between what they're receiving in on their mortgages and what they're paying out in interest. So a lot of that could be squeezed coming into the future, as well as some of the bad debts building up as interest rates go up. And looking at resources, generally speaking, it was a little bit disappointing. They underperformed. The net profit after tax across the board was down across the board in terms of where the consensus expectations were. So that didn't bode particularly well for resources. One of the standouts was Medibank. Medibank actually, it was up over 13% for the month. It was on some solid results, as well as the fact that the Medibank has had a bit of a bad run recently with the cyber attack last year, really forcing the share price down. So it's making a bit of a comeback on some solid earnings. The final point over the month is that the earnings results were pretty mixed. There was a lot of results that were good, a lot of results that were bad, and that's caused the large caps to potentially underperform some of the mid caps in the market, which has resulted in MVW doing particularly well during the month of February.